Hey everybody, so it's that time. It is 3 o'clock in the afternoon, and so my name is Linda Murray Bullock. They call me the business plug. I am here to plug you into bookkeeping. Let me tell you about bookkeeping. Bookkeeping monitors the lifeblood of your business. I don't care if you're selling nails or if you're selling South meat down in the South. I don't care what you're selling, but bookkeeping is the way to keep track, to monitor your money so that you can become sustainable and so that you can start scaling your business. What doesn't get measured doesn't get done. So if you're trying to get to six figures, right? This group, Facebook group, is all about building your own six-figure business. If you want a six-figure business, then you're going to there's a must. You must be able to measure your money. Today we have our guest on from TLG Professional Services, the CEO herself, Tracy Tate Jones. Hey, Tracy.
Hey, how are you?
Doing
Thank
good.
you for having me.
Well, good. We're so glad you dropped by. This is the Business Plugs Mixer, and this is a special edition because you're going to tell us about bookkeeping and how we can get everything back in order. Because we sometimes get
Yes,
out of
yes, yes.
order. We get in $20, we spend 19. So we
Right.
we don't know where
For
it went.
21 and didn't even realize it.
Yeah, we don't know where it went. We got in 20 though, but we don't know where the
Right.
19 went. But we spent the 19 and we down to that last dollar. So help us, help us, help us, help us to get it right. So would you please introduce
Amen.
yourself and tell my followers here in this group, there's over 400 of them who are would be or existing business owners.
Awesome. So I am Tracy Tate Jones. I am the CEO of TLJ Professional Services, where we're about all things financial. And we do bookkeeping, accounting, taxes for individuals as well as business, life and health for individuals and business coaching, business formation, and business funding. So that's why we're about all things financial. I have a master's in business, a master's in accounting, and a master's in public administration, and I bring to you over 35 years of experience in all of the above.
That's some good stuff. That's some real good stuff.
Amen. Amen.
That's some real good stuff. So it sounds like you're going to know what you're talking about.
That I do. I've been living and breathing accounting and bookkeeping for 35 years. It's been my whole life career. I've invested in it. I continue to invest in it, to keep my education current and to keep my certification. So, yeah, I know what I'm talking about. And I speak from experience. So, everything I say
Absolutely.
is fact.
Absolutely, absolutely. So, what we want to talk about, so this is entitled Bookkeeping for Successful Businesses. So, can you tell us some of the things, the don'ts, and then give us some of the do's that we should be doing as small business owners?
I definitely will. I have a presentation if that's okay.
That
So
is
I'll
perfect.
talk about the difference between bookkeeping and accounting as well as the do's and don'ts in bookkeeping. How
Well,
about
at
that?
this, that sounds excellent to me. So, at this point, I'm going to turn it over to you. So, if you go ahead and share your slide, I'll be out.
All righty, give me 2 seconds. Let me pull that up. Let me know if you can see that. Can you see my screen?
We will be able to in just a second.
Okay.
So are you sharing on your side? Wait a minute. Are you sharing on your side?
As far as I know, yes, ma'am.
Do you see it at the bottom? I don't see it. So
Okay, so
do a
let's see.
do a
Let's
share your
try
screen.
again. There we go.
There it is.
Now you see it.
Now
Okay.
I see it. So we're gonna put it up, and then
All righty.
we're gonna let you have it, ma'am.
All righty. Well, let's get started. Okay. We're going to start with what is bookkeeping. Okay. So, bookkeeping is different from accounting, and I will go over accounting in detail as well. But bookkeeping is the recording of your day to day transactions. So, it's all of your money in and your money out of every single day transactions. Okay. So, it includes your sales, any purchases that you make, any payments that you send out, as well as any open invoices you have on your books where you're still waiting for your clients to pay, as well as any open payables you have on your books where you're waiting to pay your vendor for services or products, right? As well as your regular expenses, rent and utilities and phone and advertising, marketing, all that good stuff, okay? Now, there is something called a full charge bookkeeper, which will perform both bookkeeping and accounting duties. So you need to be aware of what you're hiring when you hire a bookkeeper or bring one in-house as an employee or even as a consultant, because when you ask for bookkeeping services, you need to be clear on what services you're getting, because a full charge bookkeeper does everything versus a bookkeeper can be brought on to perform certain tasks within your sales, purchases, payments, receivables, payables, or expenses. Okay. Now, what is accounting? Accounting is actually the review of the bookkeeping activities. So what that means is that somebody is doing the day-to-day transactions, right? Entering all of that stuff, classifying them to the correct expenses, to make sure that you're optimizing our taxes, because where you code your expenses does matter. Not everything in your day-to-day transactions would be on a tax deduction, especially if it's an asset, right? So if you code something as an asset and it was actually an expense, that will change your tax return. Okay. It would also change your financial statement. So the bookkeeping is very important to know exactly where your transactions are being recorded. And what the accountant does, or what the accounting piece of it is a review of all of those transactions that were done and coded to make sure, number one, that they were in the right account, number two, that it makes sense where they're coded to, and whether or not they should be capitalized. So every company create their own policy and procedure around capitalization. And what that means is this: if you have an asset that you buy, so something, most companies use $1,000 as a threshold. So if you buy something for 1,500, for example, you would put that on your balance sheet as an asset, and then you could depreciate that item over the next few years. Each item or classification of an asset have different lifespan, right? So like real estate, for example, has the longest lifespan of 27 and a half. It's not the, meaning the only, but it's one of the ones that's classified as 27 and a half that you amortize or depreciate this that asset over that many years. Now, things like a car, for example, would only depreciate for 5 years. So depending on the dollar amount of your item, a lot of time determine whether that purchase is an asset or an expense, but that matters. So that's something that your accountant would do to make sure that the items that's being expensed should actually be expensed and not capitalized. They also review your financial statements in the whole, as well as provide metrics. So what metrics does is let you know how your business is performing. Okay. If you're not keeping track of, if you're not preparing financial statements and you're just recording your money in and your money out on an Excel spreadsheet, I can guarantee you you're not tracking your metrics. Because just because your sales go up, a lot of time when your sales go up, so do your expenses, because it costs something to get you those extra sales, right? And without actually preparing financial statements, you may or may not have those metrics, right? I haven't seen it where if somebody's keeping their books on a Excel spreadsheet, I have never seen that they actually created a metric for it too. Well, back in the day, before all of this technology came about, right? Because I'm way back then, 35 years, we used to keep stuff, records on paper. And there was no really such thing as metrics, but there was still measuring points. So metrics have gone back a very long time. And those are key measurements to see how your business is doing, regardless of what economy you're in. It also means reconciling. So a lot of times people don't reconcile their bank accounts or their general ledger accounts. So in the bank account, banks make mistakes too. So don't think just because, it's a bank that what you see in your account is correct. Banks make mistakes. They could short you money, they could give you too much money, okay? And under a certain dollar amount, they don't even make those corrections. So I've seen, for the most part, up to like $10. They will correct a $10 mistake, but they rarely will correct a $5 mistake. Meaning that if you wouldn't put a deposit in the bank and it was for, let's say, $995, and they only put $990, they're not going to give you your extra $5 unless you contact them and say. But in the same manner, if they put $1,000 instead of $995, they won't come back and take that $5 either. So there's a threshold that they use before actually in their reconciliations. And a lot of times when they do their reconciliations is when they find these mistakes, right? So even the banks have to reconcile, but you cannot assume that just because it's in the bank is 100% correct. They make mistakes on checks, they make mistakes on deposits as well as expenses, okay? So you have to remember, although all of this technology is fine and dandy and good and all that stuff, there's somebody behind it pushing buttons or somebody behind it keying in stuff, right? So don't assume that your bank account is 100% correct. You won't be able to find errors, or even if there isn't an error, perhaps there's a bank fee. You won't know that there's a bank fee if you don't reconcile your account. So it's very vital as part of your accounting practice, bookkeeping and accounting practice, to reconcile your accounts. Now, with corporations, mostly public corporations, you have to do quarterly reporting to the SEC. That's Securities and Exchange Commission. Most people, well, put it this way: if you're publicly traded, you definitely have an accountant. It's required. You have to have a accounting company to actually audit your records to be publicly traded, and they have to do reports on your audited financial statements so that they can submit it to the SEC. Regardless of if you're publicly traded or not, as a corporation, as you grow your business and as you have more moving parts in your business, there will always be financial reporting, whether it's reporting to the CEO or if it's reporting to a board of directors, depending on how large you grow your business. There's always reporting, and that's something that the accountant takes care of, as well as they advise you on your numbers, right? So this is the main difference. If you can hear me speaking as far as what a bookkeeper does versus what an accountant does, or a full charge bookkeeper actually does both. They do both sides of this, right? So you want to make sure you are very clear on what you're asking for, because you get what you ask for, number one, and you will get what you pay for. Okay. Invest in your company, invest in your brand, invest in yourself always. If you don't have a bookkeeping background, it will cost you money by not investing in your business and having somebody track your money correctly. Okay. Now, moving right along. Best practices: know your numbers monthly, quarterly, as well as annually. So monthly is making sure that all of what you're looking at can be compared to the following month, right? So that's how you look at metrics. You look from month to month, quarter to quarter, and then year to year, right? You want to see if you look at an annual financial statement per month or even by quarter, you want to see where those peaks and valleys, because there's always peaks and valleys in business. I don't care what size business you are. You could be millions and billion-dollar companies. It's how many millions is going up and down, right? So always know your numbers. You want to look and see what months of the year perhaps your sales drop, or what months of the year they increase, because maybe around the holidays, depending on if your product or service, right? If your product base, you might see more sales in December, around Christmas time or around Mother's Day, right? Around a gifting holiday. Whereas, like with us in the tax industry, our dip, or spike, I should say, it's not a dip, it's a spike, is around tax time, right? January through April. And then it might dip in May because people stop submitting their stuff, especially if they filed an extension, and then it'll spike again around the deadline for the extension, which is October. So knowing your numbers monthly, quarterly, and annually helps you make business decisions. Okay. So what is your financial position? What's your debt to income? Your return on investment? These are the things that banks look at if you're trying to get financing. Okay, so you have to have financial statements in order to get any kind of financing because the bank want to see or a lender want to see how your business does and then what they can expect from month to month, right? They know that your sales dip in say June, then they would look at and prepare your loan based on the dips, right? Did you earn a profit or loss? You won't know that if you're not keeping track of or doing your financial statement, right? Because in one month you might have a profit, but the next month you may have a loss. As a whole, it may net to a profit or a loss, but you won't know that if you're not tracking monthly, correct? Record keeping. By law, you're required to keep your records for 7 years. I say 10 is best because as your business grows, as things change, you want to go back and reference to. Now, the IRS, Franchise Tax Board, or comptroller, so in the state of California, where I'm at, we have the Franchise Tax Board, which is the state entity kind of monitoring all of the money. In other states, it could be the comptroller, it could be the Secretary of Finance, or, different departments, or different states have different departments managing and regulating the money for the state. So by law is 7 years. Now you are able to scan documents now because we are in a technology era where you could scan documents, you could take a picture of your receipts because receipts fade. That is actually suggested, especially if you fold them in that fold, they're always shaded or where you can't read it. So it's always best to scan your documents at this point, and you don't have to hold on to the paper document anymore. You could discard the file in 7 years. So me as a accountant as well as a tax preparer, I hold my clients' documents for 10 years as well as my own. Now, if one thing that I want to express to you is that, like with the IRS, if you were to contact the IRS to get a copy of your tax return from, say, 5 years ago, they're going to tell you they don't have them. They only keep them for 3 years because that's their statute of limitation to bring any dispute against your filed taxes. Now, if you use a professional tax preparer, your tax preparer by law is regulated to hold your records for 7 years. So you would go back to your tax preparer to ask for a copy of your return, and they should have it. Okay. If you self prepare, I don't know, most people use a TurboTax or whatever. To my knowledge, TurboTax will go back. I don't know how far they go back to. Right. So it's always best to have a copy of your return and scan that as well as part of your record keeping document from year to year, and keep them for at least 7 years. I do suggest or recommend 10 just to be on the safe side because you just don't know. Because in some cases, you might not just need your documents for tax purposes, but it could be for legal purposes, right? In a lawsuit that's brought against you, or in a divorce settlement or whatever, right? So keep your documents. That's very, very important. Another best practice is invest in yourself and your business. You heard me say that earlier. You have to keep up with relevant information in your industry. What's changing? What's new? Like during this time of COVID, a lot of businesses had to pivot, even like restaurants and stuff. So I had one client immediately pivot to doing delivery and pickups instantly. Well, I have another client in the restaurant industry the same way. They kind of buckled, right? They didn't know what to do. They didn't know how to pivot. They were not staying relevant or staying abreast of how other businesses like themselves in their same industry was pivoting in this time of COVID. So by keeping up with the relevant information in your industry, subscribing to memberships and masterminds and newsletters, you want to stay abreast of what goes on in your industry, not just for like what is everybody else doing. So you're not looking from a competitive standpoint, you're looking from a resource standpoint. What is everybody else doing? Should I do what they're doing? Will that help my business, right? So what's good for the goose is not always good for the gander. Just because it worked for someone else doesn't mean that it worked for you, but it's at least a consideration you can do, being that they're in the same industry, right? It's kind of the same thing as being, just because, I do accounting and I'm a corporation, that the next accountant have to be a corporation. They could be an LLC, they could be a sole prop, or they could be um, a partnership, you know, to each his own, but be mindful of what's going on in your business and what's best for your business, because that's your journey, right? You dictate your journey. Okay. Seek continuing education, courses and certificates. From year to year, it's changing, right? So me personally, I've been in this industry over 35 years. So yes, I've had to pivot year after year and century after century, right? So we went from manually preparing tax forms on paper to now it's electronically, and then it went to electronically submitted. And just recently, the IRS is now allowing us to submit amended tax returns electronically. That's brand new, like 2020 new. Out of all these years, right, they're finally allowing us as tax preparers to submit an amended tax return via e-file. Love it, love it, love it. But I wouldn't know that if I wasn't staying abreast of the changes and what's coming new, what's going out in our industry. So it's not just about staying abreast of what's coming in, but also what's leaving, right? So you need to continue your education, do courses, get certificates to know or to be an expert or considered an expert in your industry. Okay. And then outsource what you don't know how to do or what you're not an expert in. Right. If you haven't taken accounting courses, do not do your books, period. I can't express that enough, because if you don't know what you're doing, that reflects not only on your financial position of your business, but it also affects your tax return. It also affects your ability to get loans and credit and everything else. So it's a ripple effect just from bookkeeping. That's how important it is. So I can't express that enough. If you are not an expert in whatever it is, whether it's bookkeeping or marketing, right, or sales, whatever you're not an expert in, outsource it. And that allows you to focus on what you do best and to expand your business. You can have more time to think about pivoting or making business decisions, because you don't have that worry of something that you have no idea what's going on anyway. And it'll save you a whole lot of stress and heartache and headaches. Trust me. And then let's go over these do's and don'ts. Pet peeve, pet peeve. Do not commingle your business and personal funds. Okay. You need to have a business bank account. It's a bookkeeping nightmare. But besides that, I always say you leave money on the table when you do that. Okay. If I'm just buying everything for myself on the same card that I'm spending for my business, when you go back and look 5 months later, 2 months later, even a month later for me, you're not going to remember, was that a business meal? And who did I meet with? Or did I go to Costco for the business, or was that for my house? Right? Was that Staples? Was that for my house, or was that for business? Because some stores you just can't tell. It looks the same. And I actually met with a client yesterday who was doing just this. And of course I got on them about it. But so one thing that I was able to decipher for them is that they were smart enough because he makes juices, right? He was smart enough that when he does grocery shopping, it goes on one card. It's same bank account though, but it does go on one card, and then the products and stuff he buy for the business, it's a different card number. So when he download everything from the bank, he will be able to say, okay, this was bought with that card, so that has to be a business expense. But what if you didn't do that, right? How will you know? How will you know which ones of these items, especially if you have products that you go to the regular store to get the same way you would for your business, right? So that's a don't. I'll go to the do second. Don't leave money on the table trying to do it all. Okay. Earlier in this presentation, I mentioned when you start bringing in more sales, something was done or money was spent to bring those sales in, whether it was an increase in marketing, whether you paid a referral fee, or you paid something to get more sales. No matter what it is, you invested in order to increase your sales, right? If you don't manage your bookkeeping correctly, you're leaving money on the table. I can guarantee you're leaving money on the table. It's the same example of the cold mingling. If you're cold mingling, you're leaving money on the table because you can't guarantee that you've captured everything because it could be personal or business, right? Or the reverse could be that you're capturing too much. Now, in an audit, you'll pay fines and penalties and everything else if you overstated your expenses because that reduces your taxable income, right? So, in an audit, they look for stuff like that. If you have a business bank account and all transactions are done through the business bank account, there's no way for you to mismanage the money. Now, you can misclassify something on how something should be treated. That affects your bottom line. So it's a less impact than commingling, but it's definitely an impact. So don't get me wrong about that. Do not ignore notices from the IRS, franchise tax board, state, federal, city, anything. Do not ignore them. Even if you think you know what it's about, always open it, always read it. And if you don't understand what it is, that's also where there's a benefit to not only have a professional bookkeeper or accountant on hand, but also a tax preparer. So with me, you get it all, right? But you have to have these professionals in your business so that if you get something that you don't understand, you have somebody that's able to explain that to you. Okay. And do not make decisions through emotions. Plan, plan, plan. Step back, think about what this is, don't overreact. When you react in an emotion, a lot of times you'll go back and say, well, I could have handled that different, or I should have did it this way, right? So in this COVID, I know a couple of people that should have been a client. They were not quite my client yet, but by the time they got to me, they were already closing their business because number one, they didn't know how to pivot, and they didn't talk to nobody about how they should pivot. They didn't follow their industry to see what other people were doing. They just thought, there's no way I'm gonna survive through this. I'm gonna close. So plan instead of making the decision. So also what mattered in this making decisions and so forth and having a bookkeeper and all of the above is in this COVID, people had to apply for loans and so forth. You had to actually, if you got a loan, like you got the PPP, you got the EIDL, you're going to have to prove where those monies came from. So if you don't have a bookkeeping, if you didn't use bookkeeping software, they did open it up to sole props. You have to account for that money and you're going to have to prove it. So otherwise, it's no longer a grant or forgivable. It's a loan that you have to pay back. So keep in mind about that. And this is where you want to do your dues. Open a business bank account. When you go into a bank and say, I want to open an account, if you're a sole prop, there's a certain account that they allow you to open. It is a business account, but the requirements that they have, whether you're a sole prop, you're LLC with partners, whether you're a corporation or S corp, they need to see your articles of incorporation if you're a corporation. So depending on what entity structure you are, they're going to ask you for those documents so that they know what banking products to put you in, because it also determines your limits on what they allow you to spend in a day, your deposits, all of that stuff is regulated. But you have to, you need to open a business bank account as a due to separate and to prevent the commingling of your personal and business funds. Now, all receipts and payments are recorded in your business bank. So, one thing I always advise to my clients is never pay stuff in cash. Because even like for me, if I had go and pull $40 from the ATM, 2 days later, I'm wondering where that $40 went, and I can't even account for it. Always use your business card when making purchases. There's a lot of online activity now. You will get an email confirmation when you purchase online, which is great. That should go in your receipt vault, right? Create a folder, whether it's in your email. So I have folders in my email, I have folders on my USB drive. And then from somewhere like Amazon, you can actually go in your account and look at your order history. But you paying for it with your bank account, if you were to ever be audited, there's also a paper trail, right? You're able to say that this transaction was transaction number XYZ. Let me get the receipt from this merchant, because most merchants will have a copy of the receipt. Most vendors will have a copy of that receipt. Let's say that you forgot to scan it, or you lost it before you scanned it, and stuff like that. So by using your card, at least all transactions are in one place. Your debit card is what I'm saying, or business credit card, they're in one location, or two if you have the debit card as well as a credit card, but they should be from your business. Now, let's say that you can't open new credit to do a business credit card. You can take one of your existing credit cards and make that one a dedicated business card to use. You just don't want to use it for nothing else, right? So you definitely always want to eliminate the commingling of your business and personal activities, okay? Hire an assistant in order to scale your business. No way can you continue to do everything yourself and scale your business. You won't have time for it. Okay. The more sales come in, the more service requests come in, you're going to have to hire help in order to scale and reach those next dollars. Now, we're talking about six-figure businesses, right? And either getting to six figures or you're already in a six-figure business. There's no way that you could reach six figures in your business if you're not getting some kind of help in your process. And if you've reached six figures, there's no way for you to get to seven without adding team members, or even if they're not employees of your business, consultants, right? 1099 people, consultants. You have to get help in order to scale your business. So keep that in mind. Do reconcile your accounts monthly. I went over that in detail, that you want to reconcile your accounts because bank make errors, as well as, there's fees in the bank account that you may or may not have accounted for. That's money out your pocket. So you want to be aware of that. But that's also a expense that you can deduct, right, on taxes and everything else. So reconcile your accounts to make sure that everything was classified correctly and to make sure that everything has been accounted for from your day-to-day transactions. Do file your taxes monthly, quarterly, or annually on time. Penalties, penalties, penalties. If you have a payment due with any tax filing, whether it's your sales tax, whether it's your property tax, whether it's your income tax, if you don't pay it at the time that they're due, you will be assessed a penalty. You will be assessed interest. Penalties, I believe, are one time, but the interest is not. You're going to get those over and over and over based on the account balance. So the more you pay it down, the less interest will be, but nonetheless, you will have penalties and interest if you do not pay your monthly and or quarterly, especially annually, filings on time and pay on time. So with that, that's the end of this presentation. I'm going to stop sharing my screen, and I would love for Miss Linda to come back and join me. Let's have some common conversation. Perhaps there's some questions I can't see.
So hey,
Hey, hey, hey.
information. I sat here and I was like amazed. Hey, Beatrice, thank you for joining us. But yeah, so when we talk about getting all these loans and all this money, these loans and grants and things, that information you just shared with us is going to help us prioritize how we monitor it. so that we
Correct.
can be accountable, because with grants and with
Yep.
loans there comes accountability, and
Yes,
so you
ma'am.
need to know how you're spending it and who you're spending it with. So
Correct.
receipts are important. And so I love the idea of, tracking everything you do. No cash, people. Make sure
Right.
that you use your card or your checkbook, and make sure you're very good about putting notes in. Like, even if
Hmm.
you are, when you're doing your reconciliation, sometimes you have to move things around, because sometimes the systems mess up too, right? And so
Right.
you have to move things around to make sure they're in the proper categories. You do this monthly, you won't have a problem when it comes to annually doing your taxes,
Correct.
or even quarterly when you're doing your taxes if you're a corporation. Just staying up on it. So I mean, it's being good stewards, right? It's
Right.
bigger than just doing, the books. It's being good stewards of the trust that people are putting into you as being a business owner.
Correct.
So, hey, Beatrice, do you have any questions for Tracy? Or anybody else that's on here? It's a quiet group today. Usually we have a few people that jump on and kind of listen to what is going. And I do know that money is a tough, touchy subject. You know,
Yes.
I can remember when I was teaching for another group, and they had money as the third class, and people wouldn't come after that, because once you befundled them with all the things about money, they were like, well, I just want to sell something. I don't want to do all this other stuff.
Right.
But I would really think those businesses are around today,
I would
because
agree
that was,
with that.
yeah, because that was probably 6 years ago.
Or they finally got on the train
If they
and doing
didn't
things
change,
right. Yeah,
yeah,
they had to
yeah,
change,
yeah.
to
If they
do that.
didn't change, I would hazard to say they probably are not around today, because we already know what the statistics say about businesses closing.
Right.
And most times it's because they've mismanaged the money, or their records aren't there to support them, or they run into, because you can't, what you don't measure doesn't get done. Like
Yep.
you're talking about in this group, we're talking about building a six-figure business. And in order to do that, if you're not tracking your revenue and your expenses, how will you know when you get to six figures?
Right.
I mean, you don't know, because you're getting in 20 and you're spending 19. And also, I have a friend from the TVA Credit Union here 2 weeks ago, and he talked about, Linda, what we want them to do is create a six-figure bottom line business.
Right, net profit, not
Yeah,
just sales. Exactly.
yeah,
'Cause
yeah.
it's easy to make six figures in sales or in revenue, but if you put out 5.999 in the expenses, you only made $1.
Yeah, exactly. So that's a very different thing. And in this group, we're trying to get six figures on the bottom line, not on
Correct.
the top line. I mean, the top line, cool, but bottom line is more interesting. Bottom line is what we want, to have a six-figure business where you have a six figures on the bottom line. Now that's boss.
That's real.
That's boss. That's being a good steward of your money and keeping track of it. So that's why you're here today, and we can't thank you enough. I
Thank
mean, I
you.
cannot overstate how important this is, because the bookkeeping is the monitoring of the bloodline, right?
That's true. That's
You
true.
know, you go to the doctor and he looks at your blood pressure, right? Highs and lows, and he can tell where you are, how well you are. That's the same thing about your finances.
Correct. That's the
You,
pulse of the business. Your financial statement says how healthy your business is, and it's very much so what lenders look for, investors look for. You know, if you want to sell your business eventually, those numbers matter. If you want to go on Shark Tank, you got to have those. You got to
there
have those
you go.
numbers together because they want to know what they're investing
Absolutely.
in. Whether it's a
Absolutely.
private investor or even the big banks. You have to know what your numbers are. There's no way around
Absolutely. That is the lifeblood of businesses. And so that's why I keep coming in the group talking about the money part. Yes, it's uncomfortable. Yes, it's taking you places you probably haven't done, because who's teaching that in some communities? They don't get that education, right?
Mm-mm.
And so I am trying to help people build six-figure businesses, but I have to get them to understand how important, how imperative it is for them to know their numbers. Like if you don't know your
Exactly.
numbers, that right there is going to keep you stagnant, and it's not going to allow you to scale your business. So you need to know your numbers. You need to reconcile your I love the do's and don'ts. Like they're very explicit, right? They tell you exactly
Mm-hmm.
what you should do and this is what you shouldn't do. And I love
Exactly.
the do's and don'ts. I love the do's and don'ts because they're very clear and you don't have to guess about what's next.
Right.
So again, I thank you for coming
Thank
on here,
you.
ma'am, and spending your time with us this afternoon. And
Thank you.
I'm going to post this like everywhere I have access, so you'll see it on LinkedIn and Pinterest and
Awesome.
other places.
And
Absolutely,
I'll share it as well. As soon as I see it,
absolutely.
I will share it to my community as well because this is important information. There's a lot of businesses that's been created during this COVID, and part of what I teach later on today, California time, 3 o'clock, is mission, vision, and purpose. Like, why are you in business? Because that drives the rest of everything else, right? Because you're not
Absolutely.
going to invest in your business. You're not going to track your books if you just in it for the money. If you just in it to make some dollars and
Yeah,
not trying to really have a business, maybe
absolutely.
it's a hobby versus a business, right?
Absolutely.
So
And I try
knowing
to
that,
get my students to understand that while you may be in it to make money, but I don't think you're in it to make money. I think you're in it for the things that money allows you to have, like the
exactly,
experiences. And so I challenge them to think differently about why they're really there, right? Because if you're doing a kids group, you have to have some kind of caring for the kids. If
right,
you're doing a women's group, a children's group, a male group, felons, ex-felons, if you're helping small kids, whatever you're doing, you have to have some kind of affiliation with them in order
right,
to be successful at this.
right. That's
Because the
true.
money is not it.
And at this point, we need to build generational wealth, and having
Absolutely.
your own business definitely allows that.
Yeah.
Because how you do business, you could pass that on. You rarely see businesses now where it's the owner and the sons. You know how it used to be,
Mhm.
like Sanford and Son, right?
Yeah, yeah, yeah,
They
yeah.
started that, where you pass businesses on to your children and the children pass it on to their children. But somewhere along the way, that got lost in
We lost our
translation.
way. Yeah,
Yeah, but that is how you build generational wealth. It's through having
absolutely.
your own business because
Absolutely.
nobody is going to pay you enough to build a generation. Only your
Absolutely.
own build business can do that.
And it goes to talk about, so even if like you're trying to start a business, what if you could purchase a business that already has customers, that already has
Right.
assets? Like we don't
Mhm.
think about buying businesses, we don't think about selling businesses.
Right. Or even buying into businesses,
Yeah.
right? So you could
Invest,
become an
yeah,
investor. Like as a corporation, you could sell shares of your company to an investor where you share profits, right? Something is better than nothing. I'd rather have a little bit of something than all or nothing, right?
absolutely.
So,
Absolutely. Absolutely.
having your financials together, having your bookkeeping in order, having tracking your receipts and all of that, that is the recipe for success in your business.
Absolutely. And be incredible out here in these business streets.
That part.
Because that's what we're trying to do. You're trying to get away from the hustle, right? I'm
That's right.
trying my best to get us all legit so we can qualify for some of these benefits they're putting in places for businesses, and so that we can get PPPs or whatever
Right.
else you're throwing in order to help businesses become sustainable. I want us to qualify so that we can get it.
Exactly.
Yeah,
Exactly. And it's
yeah.
never too late. I mean, if you
No,
haven't
no,
done it
no,
yet,
no.
time is now, right? The
The
time
time
is
to
now.
start was yesterday.
Yes, it
The
was.
second time to start is now.
Definitely time to start now if you haven't started already. And if you're just getting started in business, the time is now
Yes,
because you need to track what's working in your new business and what's not.
yes,
That's part of the pivot sometimes. Maybe
yeah,
you cancel a product because it's not making you no money, it's costing
yeah,
you money. And that's
yeah,
product or service, right?
yeah,
So,
yeah.
Yeah.
Absolutely. I love it. I love it. This has been good stuff. This has been really good stuff.
Thank you.
So if you're watching this on the replay, go ahead and put hashtag replay. If you have any questions for Tracy, then feel free to put your questions in the comments. But my name is Linda Murray Bull. They call me the business plug, and I am plugging you into bookkeeping for your business. It's bookkeeping for success. So please reach out. Um, how can they reach you, Tracy?
So you can reach me. You can follow me on Facebook, on Instagram, or LinkedIn. All is TLJ Professional Services. We're about all things financial. But you can. Our website is tljprofessionalservices.com. You do get a 30-minute free consultation to see if we could work together, see what your needs are, to kind of do a business assessment before you go diving in and seeing what you have and have not done. Right.
That's good
So
stuff.
take advantage of that. It costs you nothing when it's free, right? Free consultation. You can't beat free information, right?
Absolutely. Absolutely.
Personalized because it's one-on-one. So,
Absolutely. That's good stuff. That's
yeah,
really good stuff.
tljprofessionalservices.com. Take advantage of your 30-minute free consultation and let's see where your business is and where you're trying to go and let's make it happen.
Absolutely. Absolutely. I underscore and co-sign that as well. I truly believe that you can get our finances together so we can be financially strong so that we can start building into that bottom line.
That's
So
right.
again, thank you, thank you, thank you. And you guys have a great rest of your weekend. I'll see you Sunday at 7 o'clock on the Business Plugs Mixer. You guys have a great weekend.
All
Bye-bye.
right. Thank you. It's an honor.